Hello there. Well, let's catch up because I think this is important. I started the day with a $19,000 profit soon into the trading day, and I ended the day with a $2,000 loss, and I really couldn't be happier. Why is that? Why would I be happy? Because turning this ship around, turning from purely short to mixed, is hard and somewhat expensive and a little dangerous, but it is important. And the kinds of gains I think the bears are going to see in November will make this month look like just the beginning. So I am perfectly delighted to be down a couple of $1,000 on the day, because at the end of the day, in a literal sense, not the figurative sense that the overtired expression is used, at the end of the day, I was long a bunch of stuff that I wanted to be long, and I was a lot less short. I'm also not, pedal to the metal, heavily margined anymore. During the past couple of weeks, I had reached like 170% margin. I'm back down to like plain old 100%, not using margin at all. And I've got a split of about 75% short, 25% long right now, which for me is, ravingly bullish. So this morning, I hadn't even looked at the ES all night. And this morning, it was clear from the emails I was receiving that we were plunging again, which I didn't like, because we really need to rally, folks. We really need to rally, because the big opportunity demands it. And I wanted to talk about what I think is ahead of us. What are my screw-ups lately? A bunch. Going long a little too early. Shorting the bonds yesterday, at the close, that was a stinker. And because I got out of them immediately this morning, and then the big kahuna, of course, which I've shown you over and over and over again, was, these options, which I dumped here and went up like so. So that was $25,000, like a nice car that just went poof. And when did I do this? That was like just a few days ago, the 6th, I guess. So all kinds of screw-ups. But, hasn't been that bad. It's been a really good few weeks. And as I say, I think what's coming is the big party. So let's take a look at a few charts, just going to be very general. And all I want to do, and I haven't walked through these in advance. I'm going to be thinking out loud, as it were. But I want to talk about where I think the bounce is going to take us. Now, as far as where the bounce will come from, not only do I not know, but I don't think it matters. If you asked me 1 month ago, in fact, if you said a month ago that you knew for a fact, because you had a time machine, that the market was going to fall big, and guess the reason, I might have offered ISIS, perhaps, if that was in the news. I might have offered up bad earnings. The one thing I wouldn't have offered up is like an Ebola scare across the country. It wouldn't have even mattered. The chart's all that matter. So by the same token, what's going to cause the rise? I don't know. Maybe the Fed announcement in the last week of October. Maybe things will be rigged for the election, up until the election. Things will be sort of like, sexed up and dolled up, so that Obama and company, don't get creamed in the first Tuesday of November. I don't know. Maybe Ebola will be contained and diminished, and we'll see that it's just overblown hype. I don't know. But what I do know is that a rally would do us a world of good. Not just because I'm long a bunch of stuff, but because it would provide the bull trap that just wakes me up with glee. So anyway, here's the Dow Jones Composite. Now we have broken, as is the case of so many indexes, we have broken major support exclamation mark, that it's been so long coming. It's been 5.5 years coming, and my God, what a long 5.5 years it's been. It's broken. We're in a bear market. I'm not putting any qualifiers to that. The bear market started on Jackie DeAngelis' day of September 19. And so we've got the opportunity for a bounce here. We may well bounce back above the trend line. The trend line is so close, I don't think we're just going to mush right up against the underbelly of it. We may well just kapoing back into here. So in this case, something like, not quite 6,000, I would guess. I don't think we're going to get new highs, and I don't think we're going to get much more than halfway back of what the drop has been. The NASDAQ Composite, beautiful tag of this line here, and here again, some people prior to this day might have said, "Oh, maybe there's a head and shoulders forming." That's over. As I said in my post yesterday, maybe we'll just have a head and shoulder singular, and we won't really get much past here. That's a modest rise. If the rally is that feeble, that's pretty feeble. But that might be all it has. I don't know. I'm not going to look at all indexes. Excuse me. Here's the Dow. Now, in spite of what seemed like an incredible rally today, we still were down 173, which is kind of amazing that I actually managed to lose a couple of $1,000 with a Dow loss that big. But the likes of the Russell strengthened, and that affects me a lot more than the likes of the Dow. And I'll say now, since it's on my mind, what I said on Tasty Trade. My belief is that financial stocks are going to be the new energy sector for the new leg down. In other words, we've all had a wonderful time with the energy sector the past few weeks. Finance, banks, that's going to be the new one. That will be the new energy. Now, the Dow's a lot cleaner. This provides a much cleaner opportunity for a bounce, I think, because in this case, if we bounced up to the green trend line, the underbelly of it, that would put us around 16.8, which is a good hearty rally. That's a good 700 points from here. If we stall out around here, I'm excitable as it is, but you're going to see me get really excited because we've got an enormous overhead supply here, and it's just so clean that we such a clean retracement. So watch it. I'm going to speed this up a bit. NDX, here again, it's hard to say. I think we'll get past this line probably. Maybe we'll mash up against this broken trend line and kind of stall out there. Look, just eyeballing this, it looks to me the Dow is much more prone for a nice bounce as opposed to the NASDAQ. And again, let's all bow our heads in a moment of silence for the poor souls who are short Netflix puts because, all the money that those who are long puts are going to make tomorrow, that comes from somewhere. And you know where that somewhere is? Is a net zero-sum game. It comes from those put sellers, so God help them. There will be multi-1,000% losses in some cases for those guys. Russell 2000. This one, as you can see, was up over 1% today. It seems a little too obvious for it to stall here. And my goodness, it's so close. Maybe more likely would be pushing it back to this purple trend line. This one isn't that well defined. It's not that important. It doesn't go back that far, so I wouldn't put a lot of weight to that. But it actually jibes kind of not just eyeballing this. It looks like about 50% or so of that drop. So somewhere around 1110, 1120, that vicinity, I would say. The other thing which really compels me to say let's just chill is the VIX, because I'd waited so long for this tag to happen right here, and we have blown right past it. We just exploded right past it. Got as high, 31.06. If somebody told you back on September 19, when we were at 11 on the VIX, that we were going to be in the 30s in less than a month, I don't think you would have believed them. That is an amazing launch. And looking back here to the whole history, and I'll just close with this because I was really proud of this analysis. At some point not that long ago, I did an analog with this versus this. And the point I made was that we had been skirting along an important bottom and had one last kind of underthrow, if you will, that scooched beneath it. Then we began to consolidate above there and then had a big, big rally in the VIX. And that happened here too. And I've been really looking at this hard. And I think there is a possibility that, and just, hang with me here, bear with me, that if you think of this as A, and you think of this as B, C, D, and we look at this history, I'm kind of seeing A, B, C, D happen right here, although in a much, somewhat of a tighter time frame. And if history is a guide, what that means is next is this kind of thing, because the equivalent here was basically August 2007, about a year before the financial crisis really kicked in. And so if history is a guide, we're in for a pretty substantial collapse in volatility. And, that sort of parallel, again, compelled me to do something I rarely do, which is actually press the buy button instead of short. All right, well, I promised October would be crazy, and I'm as good as my word. So it'll continue to be so, but I think a balanced approach is going to benefit us, I think, in the short term. It could be a week, it could be two, but I think once the election's done, it could be hell time. So we'll see. A day at a time. This is a tricky, volatile market, and wise navigation is recommended. Good night.